So my advice is if you cannot commit to 15 hours a day of work, not that you have to do that, but if you can't commit to it, and if you don't love your business, you better love it, because if you don't love it, you're not going to defend it. So, in fact, the business will give back to you in times of crisis that you have personally. So if you've built a good business, I remember, a lot of my family members were passing away at one particular period of time, and I was so heartbroken, but I knew I had my business I can go back to and sit in my chair and negotiate deals and whatnot. If you treat your business well, the business will treat you well. And that's what people don't realize.
Welcome to the In Factor, conversations about how great entrepreneurs started, stumbled, and succeeded. I'm Rebecca White, and today's guest is Joe Sutton. Joe is an alumnus of the University of Florida and is a serial problem solver with more than 35 years of banking and business experience. His journey is highlighted in his new book, The Zero-Sum Game. With a touch of humor, Joe shares the challenges and lessons of losing it all during the 2008 housing crisis and how he worked his way back to success. In today's conversation, we learn more about his career trajectory, his inspiration behind writing this book, and what he thinks of the current market trends. Joe, thank you for joining me on the In Factor.
Thank you for having me. It's a pleasure being here.
So first, let me congratulate you on your recent book, The Zero-Sum Game. I've read the book. It's a great book, and I'm really excited for you to share more about it with our audience today. Could you tell us a little bit about what the motivation was behind writing this book?
I'm not a writer by any stretch of the imagination, but I was sitting in my psychiatrist's office, banging my head against the wall because I was unable to work a solution out to the problems that were occurring at the time for my businesses. So he suggested journaling, and the journaling came out to about 400 pages when it was all said and done. And I was at a friend's house at their beach house, and I was journaling like I normally did every morning with coffee, and she read it. She read parts of it, and she's like, "This is really, really good. Have you thought about making a book and writing a book?" I said, "Well, not really. I just don't have time. I'm not the studious type." But she says, "That's an excuse." So we ended up 5-6 years later. It's done, and I'm happy it's done, and now I want to share it with the youth. I think the youth need to see, the good, bad, and the ugly about business, because it's not all roses and unicorns.
So, well, first of all, thank you for writing such a book, because as an educator, I agree with you. I think it's really important to hear the full story. And I'm really excited about your book, because one of the topics that's really interesting to me is resilience and coming back from challenge. And so this book, there was a reason that your therapist recommended that you write this book. So tell us a little bit about how you got to the point of writing this book, and sort of what this book is about.
The book is extremes. There is the slow and steady, and then there is the fast-paced ego, which in business, you should never have ego in your business, because that is just the number one thing that'll kill it. So it was a book that basically explained how I got into a mess, into a pickle, and how I had to work the next 10 years to work my way out of the pickle. And when all was said and done, and when all the numbers were crunched 10 years later, I learned that if I would have just stayed on the slow and steady path, didn't try to skip over, board pieces and do what I was supposed to do, as I had done for so many years, I would have ended exactly numerically in the same exact place. So it really was an eye opener. I think that I looking back at it, the chapters that really hit home were towards the end, where we start what ifing, what if this happened or what if that happened. And that's when it really hit home. After the book was written, you start thinking about the alternative theories of what could have happened if we went a different direction. But I don't ever like to go back and doubt decisions. I like to just move forward and see where we go from there.
Yeah, that's very powerful. There are a lot of things that you said there that I'd really love to dig into a little bit more. You mentioned ego, and you mentioned skipping steps on the board. I guess
Right.
thinking about the Monopoly game. So
Really any game.
any game. And so what comes to mind for me is that we live in a world today where everybody's kind of looking for the latest hack. Like, what's the quick way to get around doing all the hard
Right.
work? And I'm a big believer that in the what many have called the law of the farm. You got to plant the seed, you got to give it time, you got to have patience, you got to do the work, and you'll yield the results. These hacks don't always work, but tell us a little bit more about what you learned from your experience. This whole idea of you gotta keep doing the slow and steady and the hard work every day.
Yeah, it's the digging in, and it's where the ego then turns into humility, because now I was a lender that turned into a borrower, and I owed a lot of money, lots of money, and when you owe lots of money, you're expected to pay it back. That's our generational thinking. We don't want to not abide by our commitments. So that was the grit. That was the 16 hours a day. That was the traveling around the state. That was the evictions and the foreclosures and the breaking ins. And it was mainly so that at some point in the future, I thought that I would come out definitely war torn, maybe limping, maybe like you see in the war movies, but I'd come out, and that's what happened. And it was 100% hard work, grit. No one helped me. No one gave me money. No family money. Nothing. It was a 16-hour a day, every day for about 4 years.
So give us a little bit of insight. What got you into, as you called it, the pickle that you found yourself in?
Oh, yes. Well, I had started in the mortgage business mainly because it didn't require any capital. You're basically a broker going, matching one person with another. And then the business naturally grew, and then I ended up using my own money and lending to people. And I amassed quite a portfolio of loans that were paying me. And I was getting paid every month, no problem. And it was a good sum of money. So the ego part of me got bored. And that's another thing about business. Business sometimes does get boring, but you got to think of other ways to grow it and not be so what's the cavalier is a great word for that. And I ended up taking this vast portfolio of paying loans, and I ended up leveraging it. So instead of having my original principal out in the street, I had 7 times that. So I was heavily leveraged, and I was making a ton of money until the bottom dropped out and Lehman Brothers went bankrupt, and that was it. That was it. The regulators were out in force. So all my lines were pulled, and I was left with a bunch of houses that I didn't want. And that's where I am today. I still own some of these houses that I took back in foreclosure back in 2008. And we're seeing something very similar to this today, but it's not really with the housing market. We're seeing in the bond markets, very, very similar situation that seems to be occurring now. But it was interesting. It was definitely an interesting take on the whole mortgage industry, the real estate industry, the title industry. I mean, so many people were affected
Yeah, it's interesting because, I've been really interested in this idea of resilience, personal resilience, and then building a resilient company as well, and what that takes. And so I've been looking at companies that have survived 9/11, that have survived the 2008 crisis, that have survived the pandemic. And it's really fascinating. There are usually, when you look back, there are usually signs and signals that maybe you ignored. Although many of these things, like 9/11, for example, how can you predict what's going to happen, or the pandemic? But in the case of your business, were there signs or signals or things that if you were reliving this experience, you would see that you didn't see then?
I actually did see it. I ended up looking at the portfolio and running through this huge spreadsheet that the spreadsheets are what drove me to the psychiatrist. And I would work these big spreadsheets out. And I looked at the leverage rate, and I looked at the rate of returns, and I started seeing people falling behind. And I said, this is starting to become a problem. So I ended up getting a lot of my borrowers refinanced through some of these subprime lenders, and I recouped some of my capital, but I was too late. I didn't have enough time. If I had only had, I was actually talking to my mom about it yesterday. If I only had 6 more months, I would have come out clean. So it was the ego part of me was basically shown the corner, and slow and steady Joe recognized that we need to get back the reins, and it was just too late.
Yeah,
And
that's
yes, to answer your question, yes.
yeah. So, what do you think is different now about the way you do business than before you went through this experience? Because what you're describing to me was both personally and financially transformative, or transformational, I guess.
Yes. Well, it brings, when you're digging your hands in toilets and taking people out of their homes and groveling to banks, and then actually advising them because they see what you're doing with your portfolio, and they had big problems as well. It's the humility of saying, I'm willing to do anything I have to do to survive this crisis. So, like, for instance, we're heading into a recession now, right? So I texted all my children. I texted my friends. I said, the Sutton household is on recession watch. This is about 8 months ago, because you can see it, right? You can see everything getting really frothy, and the guy who cut my hair wants to buy a house to do Airbnbs. Can you imagine? And that was about 8 months ago. And I'm like, oh, this is it. It's all over. And that's when we went on recession watch. And that's so you recognize these types of things when you see them unfolding again. This
Yeah.
is a little different, but you start seeing it and you're like, okay, well, we have some problems ahead of us.
Every time is a little different, but it's like the importance really of history. We can't ignore history because we're going to be destined to repeat it if we do. So, we have to look back and analyze it and understand it, which is, I think, part of the message that you're talking about there. So you brought up today, and we've been through a lot. We went through the pandemic, and there were some real winners and actually some real losers through the pandemic from a finance and business perspective. So what are your thoughts? Like, what's the advice that you're giving your children, or what advice would you give to entrepreneurs today who are looking at this high inflation that we're now having, and the recession that we're not saying that word yet necessarily, but
Yeah,
we
well.
know it's here. So, as we record this right now, so what do you recommend? How does a business, and especially a lot of, say, young entrepreneurs who are building companies, what do they do during a time like this?
If anyone, see, here's where the problem lies for the last 10, 12, 14 years since we've really had really low interest rates. The business environments since the last recession have been pretty accommodative. I mean, the rates are low. Business has been really good. COVID, yes, it definitely, it absolutely was a game changer, but we got money for it, right? Everyone got their money, PPP loans, and you got all this money. But and I hope that young people, don't think that when you go into a recession that the government's going to hand you money now, because it's not the case. The young folks need to understand that when you go into a recession, it's time to assess your expenses. It's time to say, okay, what am I going to do if ABC starts to slow, and how am I going to turn the ship in a different direction to a more accommodative approach? Because a lot of people, have the big car payments. A lot of people have big rent payments, school payments, this payment. So how do you survive that? And it really is, you have to cut. That's what I had to do. I had to cut my expenses by about 70% in order for me to survive. And it was hard, it was deep, and it was painful. And that's what people have to be prepared to do.
Do you feel if you had the choice, would you go through that experience again?
Never. I don't wish that experience. I'm my worst enemy. I can't, we saw the worst in people in 2008, 2009. And that's all levels. The bankers, they panicked. They pulled credit lines when they really shouldn't have. The borrowers, they didn't pay even when they could pay. They took advantage of the system. The federal government, the local governments, everyone had their hand out when times were great. But then when times go bad, everyone turns so ugly. And I got to tell you, I hope to never revisit that situation again, because the stuff that I've seen, you have to put me on 10 shows for me to tell you everything that I saw and how disturbing it really was.
Yeah, that's kind of scary. And
I don't want to paint it as being like, whether this recession will be like that recession. I don't think so, but it was just ugly, and I hope never to relive that again.
So, yeah, I think what you're talking about is sort of what happens sometimes with human nature when people get their backs up against the wall, and it can be a time where people sort of rise to the level of rise or lower themselves to a different level, I guess.
But you have to figure that they're also in their own little survival mode, so they have to survive. But everyone's in a survival mode, and what they forget is that you have to work. So if you work, just because you work an 8-hour day, maybe you'll need to work a 12-hour day. It's work.
Yeah. And there's nothing that can get you past that. So there's a lot of new financial products out there now. There's a lot of new things going on in cyber, and and going on in crypto. And what are your thoughts about some of the crypto markets and some of the new financial markets and some of the things that are going on now?
If I don't understand it, I don't invest in it. And since I can't really pinpoint what cyber really is, and I can't understand what crypto is, and I can't, if I can't wrap my arms around the commodity itself, then I just don't see a value in it. So I stay away from things I don't understand. I understand real estate. I understand property management. I understand REITs and dividend paying stocks. I don't understand when a stock has no intrinsic value and it goes up 700%. To me, that's just a Ponzi scheme. To me, I mean, I just don't see any value in it. So yeah, I'm of the thought processes of I can't wrap my arms around it and hug it real tight. I ain't buying it.
Yeah. So let's talk about something you've spent a lot of time with, and that's real estate. And we're here in Florida, and a lot of our real estate values have gone way up. So what's your prediction for real estate? We have a lot of our listeners are really interested in that space.
Oh, my favorite. Well, I actually have a house in St. Pete, and I looked. Actually, I looked on Zillow, and Zillow tells me that my house value went up over the last 30 days. So I think that the housing pressure pricing is coming from different areas. I think Florida is a unique area, like California is a unique area. I don't think housing drops that much. I think until we have a supply of homes, which we are lacking significantly, and I can go through the math with you, but I think we probably need about 5 million units to be built throughout the country for us to have a level established playing field. We are far from that.
And that's in specific markets, you would say.
I would say in the whole, we are, if my little cheat sheet scribble pad is right, I think that we are underbuilt in the country by about 5 million units.
And how about commercial real estate?
I love apartment buildings. I manage one. I own and manage one with family. So we're full. We're beating them off with a stick. We're actually, the unit my father bought it like 35 years ago, and I've just started renovating unit by unit. So I love it. I love the space. Houses, love them. If you just have to know what to do with them, and you have to know all the pitfalls behind them. But I love the real estate market. I think that we have a long, long way to go before we catch up to where we need to be in as far as producing units. That's what we need. And I think the Fed, in their effort to press the restart button and get us back to where we have a historical normal, they're cutting the throats of the builders, and the builders are just not going to build.
How about for campuses for larger corporate locations? Now that we have more and more people working remotely, do you see companies really backing out of that kind of commercial real estate?
I'm not too familiar with commercial real estate. I dabbled in it when I was in college and my first year out of college. What I know about commercial real estate is that if someone's renting a space from you, that's their livelihood, and they're going to do everything they possibly can to pay their rent and to grow their business. And if it's in a shopping center or in an office building or in a strip center, then so be it. That's what people will do. Real estate is a tangible asset. It's, when we talk about inflation, we're talking about a currency inflation. We're talking about a food inflation. We're talking about a gas inflation. Those are tangible things, like real estate, bricks and mortar and things like that. I think inflation helps those things. I don't think it hurts them at all.
So what I'm hearing is, if it's something you can understand and it's something tangible, then you feel okay about it. If you don't understand it and it's not tangible, be very careful, and especially
Correct.
during recessionary times, investing in those kinds of spaces.
Well, now let's look at it this way. You've got a debt crisis. Now, most people don't even know that we have a debt crisis that exists today. And people say, "What debt crisis?" You've got countries that issued bonds, and the bonds aren't worth 20, 30 cents on the dollar right now, because the rates are so high in the environment that if you bought a bond last year, you lost 50%. A bond. We're talking government issued bonds. Even if you bought a T-bill last year and it's paying you 2%, now you can buy them all day long at 4.5%. So if you're that bond buyer, you just lost 50% of your investment.
Yeah,
from last year. So
That's a real change from the past.
Imagine, right?
Yeah.
You were always told you buy, T-bills and you're gonna be golden,
Secure.
right?
Yeah.
You're dead. Absolutely dead. So that's why when people ask me what do I invest in, my friends all know that if it's the paper assets, devalue, they naturally devalue, and that's why I like the hard tangible. And if I buy stocks, they're dividend paying stocks, and so that the dividend will hopefully offset the inflation rate. And that's really the only things I invest in.
So how did you get into the line of work that you're in? How did you grow up in a family that was motivated and in business and finance and was this something you always wanted to do, or how did you get to where you are today?
I hated real estate. I hated it. My father, he didn't get past the eighth grade. He was actually, if you picture one of those carpetbaggers carrying carpets through the streets of Brooklyn in the 30s, that was my dad. And so he didn't have an education past eighth grade. My mom didn't have an education past eighth grade. But what we as a family learned and watched was how hard they worked. And my father was 80% blind. So he had to take a bus to his apartment building to manage it. And my mom would stay home. And so we learned the whole work ethic. And that's why my children are doing very well, because they learn that no one's going to give it to you. No one's going to hand you, $80,000 a year and say, thanks for showing up for work today, right? No one's going to do that. So you have to work. And, I was watching something actually it was on LinkedIn, where they were saying they just want to work the minimum and be done for the day. And that's it. Well, those are the people that will probably be in the 2 percentage points of employees that won't be working, because that's what you're probably looking with the Fed, right? You're probably looking, the Fed wants to get unemployment up to about 5%.
So do you think we have a big change in this country with regard to this kind of philosophy of work and work balance, and do you see that having an impact on the productivity of
Yes. Well, think about it. You and I have a work ethic. We struggle through so many downturns. I mean, we struggled. There was a 1998 currency crisis. There was a strip center and shopping center and savings and loan bust in the mid 80s, late 80s. So we went through a lot of these things, and we can go, 9/11, then we can talk about the dot-com bubble, then we can talk about another credit crisis. I mean, we've gone through all of this and the resiliency of our generation. I don't know if the next generation has that type of resiliency.
So what do we need to be doing? What do we need to be doing to ensure this? I mean, how do we, what are the lessons, the top lessons? Because it sounds like hard work. And
this is, someone today wanted me to do a podcast, and they were saying to me, what's your goal? And I said, I'm paying it forward. He said, what do you mean? I said, I'm paying it forward. I said, because I shouldn't be here. The leverage rate and the breakdown I had, I shouldn't be here. And you know what? The universe made it happen. So my goal, if you're asking what I should be doing, is teaching the kids. It doesn't matter what level. I mean, high school, college, these kids have to understand that money doesn't just float from the ceiling just because you're a business owner. And if you owned a business the last 10 years, this has been the easiest period we've had in 40 years. So my advice is, if you cannot commit to 15 hours a day of work, not that you have to do that, but if you can't commit to it, and if you don't love your business, you better love it, because if you don't love it, you're not going to defend it. So, in fact, the business will give back to you in times of crisis that you have personally. So if you've built a good business, I remember, a lot of my family members were passing away at one particular period of time, and I was so heartbroken, but I knew I had my business I can go back to and sit in my chair and negotiate deals and whatnot. If you treat your business well, the business will treat you well. And that's what people don't realize.
Yeah. Yeah. That's really great advice. I mean, it is about hard work, but it's about making that commitment and understanding that what you put into something is going to also dictate what you'll get out of it.
That's right. That's right.
Yeah. So, what are some, for anybody that's listening to this, and a lot of our listeners are young, aspiring entrepreneurs, what would be some of the resources? Like, I hear you talk about your spreadsheets and, your calculations. So you're constantly learning. That's part of what we all do as we evolve and grow. So what are some resources? Like, what do you read and what do you look at, and where should these young people that want to be successful in real estate or in business in general, what should they be doing? What kind of resources should they be looking for?
They
People,
should
places?
they should be looking at people who have it. You did the right thing when you said earlier that I look at businesses that have survived like 2008 and 2000. I did the same thing when I invested. I only invested in companies that survived 2008. And I do research. Everything I do is online. I read Barron's. If you want to know the truth, I read Barron's and I read Bloomberg. Um, and and I follow people who are successful. And because listen, I always can learn something. And I just follow, even young people who are on, some of these websites that have so much more expertise than I don't mind. That's a big social media guy. You follow them, even they're young. You follow them because they know what they're doing.
Yeah.
So there's a lot of things you can do.
Yeah, I think that's great advice. I mean, if you look at 100 people and only 20% of them succeed, you don't spend your time on the 80 that don't, right? You spend your time looking at the 20
Of course, you always follow the success,
Yeah.
right? And
Yeah.
that's how, I mean, you don't have to reinvent the wheel. You just have to you have to, like, I turned at that same meeting. I was told to journal. I was told to get a hobby as well. And I made that little hobby. Hold on, let me see. I'm gonna get you one. Remember these? These are iPods.
Oh, yeah.
These little ridiculous things. So I learned how to fix them, and I learned how to fix every Apple device that exists, as far as little trinkets like that. And that business has become almost as successful as really any business I've seen. The markups are great, and so it's picking something that you enjoy doing, even if it sounds ridiculous, even if it's baking cookies or banana bread, whatever it is. If you love doing it, you will find ways to make money and you will enjoy it. And that's what I tell people. It's not that hard.
Yeah, the passion has to be a part of it. And like you said, if you're going to work 15 hours a day at something, it should be something you enjoy. So
That's right. That's
and
right.
and you can find ways to make money with almost everything, right? So
Well, yes. You take those little trinkets with you, and in fact, I'm going to be giving them away tomorrow at the honors college, so people can see how you can do anything if you put your mind to it.
Yeah. Well, I'll tell you, Joe, this has been great. I love your story. I love your book. I think it's, today the importance of resilience and that message. I think there's probably not a more important one out there. So I'm really glad that you're doing this and spending the time and giving back and being a role model for others who are going to face problems. I mean, anybody that succeeds is going to have challenges along the way and failures, and those failures are what define us. And
Yes.
it's whether or not we execute past the failure, which obviously you've done, and you've got a lot going on right now. I know you're you're a speaker and you're doing consulting work and you've got your businesses going. So you're staying busy, and we appreciate you taking the time to talk to us today. I always wrap up by asking if there was one piece of advice, and you've given us a lot of great suggestions already, but if there was one piece of advice you would leave with our listeners, what would it be?
Humility. I know I've mentioned it before. I can't stress it enough. Humility brings about change in the people that you're dealing with, because people always love a humble person. And even if you're negotiating with your bank or negotiating with your landlord, they're much more willing to negotiate with a guy who has the willingness to give and take. And that has been the 15 years since the downturn. I live by that.
I love that advice. And I think humility also makes us better listeners. And, what was it? Our moms used to say, you've got 2 ears and 1 mouth, right? So
that's right. That's right. I totally forgot about that.
Yeah. So, Joe, this has been great. If you mentioned social media, and if any of our listeners would like to follow you or your business or connect with you, is there a way they can do that?
Yes,
and get your book, of course.
Oh, well, that, again, the book is, I've had people call me and say, I've read this 3 times already. I love it. And I think the storyline is great, and it has some humor to it. You can reach me on LinkedIn. My TikTok is Financial Fixer 22. I have a YouTube page, The Zero Sum Game, bunch of videos on there. They're growing, thankfully, as we continue with the effort of podcasting and live events. And you can, The Zero Sum Game. That's hashtag The Zero Sum Game takes you right to where you need to be.
Well, thank you, Joe Sutton and the Zero Sum Game. Appreciate your time today, and looking forward to seeing more of what you have to say as you connect with your audience on social media. Thank you.
Thank you very much.
If you enjoyed this episode and would like to learn more about entrepreneurship, we would love it if you hit that subscribe button. Thank you so much for listening to this episode of InFactor.